McDonald's reported its second quarter 2025 results, showcasing resilience and strategic execution amidst a challenging economic environment. Global system-wide sales grew over 6% in constant currency, with global comparable sales increasing by nearly 4%. Notably, the company achieved positive comparable guest counts globally, a significant achievement given the industry headwinds. Key financial metrics: global comparable sales increased by 3.8%. System-wide sales grew over 6% in constant currency. Adjusted earnings per share (EPS) was $3.19, up approximately 5% in constant currencies. Adjusted operating margin was nearly 47% for the first half of the year, indicating business model durability. Restaurant margin increased by about 5% in constant currency, driven by franchise margin performance. Segment performance: internationally operated markets, ILM saw comparable sales growth of 4%, with all markets contributing positively. International Developmental License Markets, IDL, delivered comparable sales growth of over 5.5%, led by Japan, and positive performance across all geographies. United States, comparable sales were up 2.5%. While outperforming competitors, the U.S. market experienced challenging overall QSR traffic, particularly a double-digit decline in visits from low-income consumers. CEO and CFO statements: Chris Kempczynski, Chairman and CEO. Chris highlighted the strength of McDonald's value and affordability platforms, combined with exciting marketing and menu offerings, as key drivers of growth. He emphasized the success of meal bundles and everyday affordable price (EDP) menus in international operated markets, citing Germany as a prime example of outperforming competitors through a strong value proposition and successful menu innovations like the Chicken Big Mac. Regarding the U.S., Chris acknowledged the critical need to re-engage the low-income consumer. He pointed to the continued resonance of the $5 meal deal and the positive early results of the $2.99 snack wrap, noting its extension through the end of the year with franchisee support. He also spoke about leveraging data and technology across three platforms: restaurant, consumer, and company, to improve the customer and employee experience and drive sales and margin growth. The expansion of loyalty program members to over 185 million 90-day active users was a key achievement. Chris reiterated that McDonald's is committed to value and affordability in the U.S. and is uniquely positioned to lead the industry due to its brand power, scale, and franchisee partnerships. Ian Borden, Chief Financial Officer. Ian confirmed that the financial results were largely in line with expectations, and that the sequential improvement in comparable sales was broad-based. He underscored the company's ability to adapt within challenging environments, citing market share gains in a majority of larger international markets. He highlighted the successful launch of the EDP platform and the Big Arch Burger in France and the UK as drivers of improved performance. Ian also discussed the opportunities in beef and chicken, with Best Burger being implemented in over 80 markets and chicken market share increasing in the top 10 markets. He noted strong performance in China despite macroeconomic challenges, with a continued focus on new restaurant openings. Ian also provided financial guidance, targeting a full-year adjusted operating margin in the mid to high 40% range. He also mentioned that the company remains on track to open approximately 2,200 restaurants globally this year, with a target of slightly over 4% unit growth. Management's forecasts and future outlook: full-year adjusted operating margin, targeted in the mid to high 40% range, above 2024 levels. G&A as a percentage of system-wide sales, targeted at approximately 2.2%. Interest expense, projected to increase by about 4% compared to 2024. Effective tax rate, targeted at 20% to 22%. Restaurant openings, on track to open approximately 2,200 restaurants globally this year, with a target of slightly over 4% unit growth. Significant risk factors: U.S. consumer weakness, particularly among low-income consumers, who continue to face economic pressures impacting QSR traffic. Inflationary environment, especially in Europe, impacting input costs and requiring disciplined pricing actions from franchisees. Competition, while McDonald's is gaining market share, the competitive landscape remains dynamic. Execution of digital and technology platforms, while promising, these are still being rolled out and scaled, with significant investment required. Franchisee alignment, ensuring continued collaboration and alignment on national price points and initiatives across a diverse franchisee base. Highlights: global guest count growth, positive comparable guest counts globally in a challenging industry. International market strength, strong performance in ILM and IDL markets driven by value, menu innovation, and marketing. Loyalty program expansion, significant growth in 90-day active loyalty users, indicating strong customer engagement. Successful menu innovations, positive reception to new offerings like snack wraps and Chicken Big Mac in various markets. Technology investments, progress on restaurant, consumer, and company platforms to drive future growth and efficiency. Brand relevance, continued recognition as a culturally relevant and valuable global brand. Lowlights: U.S. traffic challenges, persistent weakness in overall QSR traffic, especially with the low-income consumer. Breakfast daypart sensitivity, breakfast remains the most economically sensitive daypart, facing pressure from consumers skipping occasions or eating at home. Cost pressures in Europe, higher inflation, particularly for beef, alongside general cost pressures, present ongoing challenges. In summary, McDonald's delivered a solid second quarter, demonstrating its ability to navigate a complex economic landscape through a strong focus on value, affordability, and strategic execution. While the U.S. market faces headwinds, particularly with the low-income consumer, the company's international performance and ongoing investments in technology and menu innovation provide a positive outlook for sustained growth.